And this is the digitalization of real world assets. That's the finance industry. We're seeing the announcements almost every day. We're seeing new on-ramps and off-ramps via the ETFs. They're coming. We're seeing, we will see, regulatory changes across the world. That's happening. We're going to see brands and culture. We had conversations on that. More about art and new use cases for NFTs. That's coming. New use cases for DeFi. New ways we're going to do that. That's coming. New layer 2s, layer 1s, changes to things like the Solana ecosystem. That's all coming. So I think we're going to see a kind of full-on crypto cycle when it really gets going. And your head will be spinning a bit with all of the stuff that's happening, because so much has been built over the bear market that things are just coming to market. 10 trillion is a 10x from here and 3x from the high. The next time around, if it goes from 10 trillion to 50 trillion, is a 5x. It's actually a lot less over time, so it's all doable. The ETF, as I said, think of crypto world as this nation state, and this is a new trade agreement. So when the trade agreement comes, it doesn't mean you do trade, it means you can do trade. People will only invest in the crypto economy if they think the crypto economy is growing. So right now, you need prices to be rising for the ETF to be a funnel of money into the crypto economy. So I don't think it's as big a deal as people think. And I don't think the crypto market goes to new lows. Unless liquidity collapses out of nowhere, which is just not going to happen. Ethereum is a very big ecosystem. Could you think of that as like a Google ecosystem? For sure. Chris Berniski at Placeholder VC wrote an article that Ethereum is Android and Solana is Apple. That's another way of thinking about it. So I think, the protocol layers themselves are big. Who else is going to build social media apps? Who's going to build all of this stuff? There's a lot that's going to happen here. So I also think we'll get adoption by Meta, adoption by Apple, adoption by everybody. So look, basically, this is just digital rails and everybody's going to use it, from the finance system to your social media app. So it's coming everywhere. You just don't realize it yet, but it will. So these massive networks like Ethereum, Solana, all of this stuff. But there will be companies as well who build the applications layer. And we've not seen that. So what we've built is the internet, but we haven't built the applications layer yet.
I guess
that you don't need 50 trillion in to create a 50 trillion market cap, because you've got things that are liquid, so they go up more. Right? If something's perfectly liquid, like the T-bill market, 50 billion in doesn't move the market because it's perfectly liquid. So with this, you don't need that much going in to make it 50 trillion. You don't need $50 trillion going in, but if you put in $1 trillion. So really, if you think about it, I think of it as the crypto economy as a digital network state, borderless. And what you need is foreign direct investment to come in. So one of these trade agreements will be the ETFs. So if you think about it, that's a trade agreement between the traditional world and the new world. And so the money will flow in. So let's say 20 or $30 billion goes into that. That'll move the market cap by $200 million, a 10x multiplier. I don't really know the numbers of the multipliers, but don't forget, if you start putting the financial system on top of these rails, that generates economic activity at blockchain level. So Ethereum earns more fees generate into the system, all of these kind of things. So I don't think it requires all the liquidity in the world, but again, my 50 trillion number is probably 2030. So we've got time to get there as well. Yes, the regional banks are still weak. Gold doing this tends to tell you it's like gold is pricing in something happening. Now, I think people like gold over geopolitical weekends like this as well, as a hedge.
Yes. Yeah.
Because you don't know what's going to happen and bonds aren't working. So what do? You go to gold. So my guess is some of this is weekend stuff. But look, gold is also driven by the liquidity cycle, very much like crypto. So a lot of people have been waiting for this to happen. So let's see if it continues past the weekend. But yeah, generally I've been bullish on gold. Every time, we produce this chart of all of the previous inflations, at this point in the cycle, you always get a small uptick, which is we're seeing now. Why? Well, it's pretty straightforward. It's generally a year after the peak of the commodity down cycle, and commodities are usually just starting to discount the upcoming cycle. So the commodities at the fast end of the curve, they bring inflation down in the beginning. So they brought it down from 9% down to 3 and a bit percent. Then they pick up because they start rallying a bit. But the slow parts, the massive parts, 70% of all of CPI is rents and wages, and they're starting to deflate. So at this point, you get this little pickup, and then the big juggernaut carries it lower. If you look at the core inflation numbers, if you look at the 1 month, 3 month, 2 month rates of change, they were all around 2% or less. So what you're seeing is clear, firm evidence that all of this stuff is slowing down. So just be patient. These things take time. But yes, I see nothing but disinflation ahead for probably another year. Be an observer and try and understand it from a broader point of view so you can make broader decisions about, is this a bigger thing than we understand? What is driving this? Are other nation states involved in this already? We don't know a lot of this stuff, right? Geopolitics, you know this much versus what actually goes on beneath the water is like an iceberg, right? Price matches my Metcalfe's law formula very well. So in which case, technical analysis is as good as doing on-chain analysis, which is just a fascinating observation. So liquidity seems to be the best indicator of the space. If I look at our GMI Global Weekly Liquidity Index, that has a 87% correlation with Bitcoin. And so that's pretty good. Well, obviously bonds, because they've got their own story going on, which is the issuance of new bonds to pay interest on the old bonds and stuff. That everything else seemed pretty consistent. We're early stage, we're macro spring, crypto spring, things like copper haven't yet taken off because we've not really got into that phase where the global economy's yet recovered. Oil starting to lead a little bit. No, it's pretty, for me, it's really quite consistent with where it should be according to the macro indicators. So I don't see anything driven by the geopolitical cycle that is changing anything. The only thing is the bond market being driven by excess supply. So liquidity is a forward-looking indicator. So if you think about a slow economy, it actually means that the Fed are likely to inject liquidity. People don't understand this bit. So I actually think we hit recession, mild recession this quarter and next quarter. I've thought that for a while now, and I think it's irrelevant because the market looks through this, is looking at the forward-looking liquidity indicators that have been rising since end of last year.